All right, guys, I am back again with another video. And in this video, I want to take a chance to look at some trade setups that we have this week for Ichimoku. Some nice Ichimoku trade setups. So I want to take a chance to look at those, show those to you, see if you can profit from anything that I'm going to show you here today. Looking at the Forex market mostly, so we're going to hop into it right about now. Stay tuned. All right, guys, so before we get started, I want you to take a look at my disclosure statement. Please understand that I am not an investment advisor. Anything I show you today is for educational purposes only. All right, so any trade setups or anything that I'm talking about, this is my own personal take, and it's something that I may do. But if you decide that you want to do it also, please consult with your own financial advisor so you can talk to them about the risk that you will be taking when trading Forex market. All right, so we're going to get into it. We're going to get right to these charts. Got some very nice setups, so let's just go to it. Look at these charts. Okay, so basically we're looking here at the Aussie dollar. Let me bring this thing over here so we could see what we got. So Aussie dollar's been in a nice downtrend. You can see what's going on. We're below the clouds. You got a bearish TK crossover. You got bearish cloud, so your future's dark. There's no signs of this thing turning around at this point, okay? So what I'm thinking of now is basically we're pretty much moving back up to some structure levels and looking like we're looking to find resistance at these points. So right now, currently, this is the current candle. And it appears to be painting a hangman right now, but don't know if that's going to stay like that, okay? So what we're really looking for is for the market to break down, get a nice close below Kijinsen, and then take a short opportunity at that point. When we short it, we also are looking at our Ichimoku observation theory. So you can see where my levels are here. Pretty much got a level, and I need to put my glasses on to see these levels, guys. But pretty much looking at the NT value at 91,536. So that'll be the first level that we really look at. And that's going to be fluctuation level because we still have that N wave intact. And with the N wave intact, we need to get through this 2 level. This 2 level is also a 52-week low, which is going to be an area where we may stall. Okay, you can see we hit that level once and then we stalled. We hit this level previously, and then it looks like we're going to, maybe if we drop back down, there's an opportunity to hit there again, and this could become a fluctuation level where we see the market range in this area. All right, so therefore this NT value is going to be a very important level. We need to get through that and get through this 2 level. I always call this the 2 level because when we have an N wave, it's like I'll draw it out for you so you could see specifically what I'm talking about. When I talk about an N wave, I'm talking about a 1, a 2. That's the 2 always. I'm always trying to trade at the 3, and then I'm looking for profit at the 4. So the 4 could be this N level. It could be this. It could actually even be NT level. It could be the V level or the E level. One of these levels is what we're looking for. So we don't use a lot of fibs to look for the where the market's going to pull back to, because we use a lot of structure and Ichimoku. So with Ichimoku, you're able to see like the 50% retracement level. So when you put a retracement on here, like if I put my fibs on here right now and I'm looking at how far did we retrace, okay, that's going to line up that 50 right there. You could see that 50 lines up with the Kijinsen. So if you have like less than 26 candles, less than 26 periods, you're going to line up with the Kijinsen level as a 50% retracement level. So you'll always know that. And then you can see where the flat clouds, they serve as levels also. So this flat cloud here served as a 78.6 level. We pulled back past the 50 and we're just bouncing on 61.8. So that's going to be pretty vital to us right now. So what we're going to be looking for now is we like to get in on price action, but we also have other ways to get into the market. So we use the RCI, Rank Correlation Index, and we also use the CMO, which is the Chaos Momentum Oscillator, pretty much like the Williams percent are, but we have that created for us to help us to get into the market with momentum. So we'll be looking to get what this candle is going to do, probably get a bounce in this area, and then look for the market to start to come to the downside. Once you see that, then remember you want to shoot for this 2 level. Also watch out for your NT, your N, and your V levels along with your E levels. That's going to be Ichimoku observation theory, so you'll shoot for those levels, okay? So the next one that we're going to be looking at is going to be Aussie Swiss franc. It's going to be the same, pretty much the same thing that you have with pretty much with your Ichimoku, sorry, not your Ichimoku, with your Aussie CAD. So previous is going to be pretty much the same thing. You can see we have this N wave. So you would basically sometimes see an N wave reversal, but we don't see that, all right, because the N wave would be like this. And that's where if it stops here, there's not an N wave reversal, and then we shoot for the N level automatically because that's your 1-to-1 level. If it was going to be a reversal, we probably would see the market break this level, all right, and then that would start a new reverse and also not violate this point. Then you would see it like a pull down and a pull back up. That's going to show a 1, 2, 3 reversal. But at this point, we don't see that. We're still intact. The market's still intact. We got a strong move to the downside. Got a bearish future. Your TK crossover is bearish. We're finding resistance at the Kijinsen. So the Kijinsen's giving us some nice resistance. The NT level lines up with your 2 level. So once you get into the trade, guys, you want to get into the trade up here in this at this NT level. So I told you again, I'll get into the trade based off of price action, the RCI, or else the RCMO, which will give me a price entry. So what that gives me is basically like my CMO is going to be these candle color changes. So what it does is when we get momentum to the upside and we violate the 3 level, the market's going to paint these green candles. When we're between the +3 and the -3, you're going to get gray candles. But once we break back below that -3 to show that momentum, we're going to get red candles. That's when we would get into our trade. So pretty much the same thing here. Like when we pulled back, we were waiting for a short where we bounced off a Kijinsen here and then we shorted. We'll take a short at this point. Now, I'm not saying we took this short, but this is what we would be looking for. Same thing we're going to look for over here. Now, since you don't definitely have the CMO on your chart, then you can also use the RCI, or else you can have a way that you get in. Basically, price action will get you in right here if you can get in with price action. Now, we use the RCI and the CMO if we can't get in with price action. We don't see that price action entry. We'll take the entry there. But when you get that entry, you're going to look for that NT value. All right, because that's going to line up with your 2 level, and then you're going to try to shoot for the N level. This N level is always a 1-to-1 ratio. Actually, it's what traders know as a measured move. So that's a measured move in the market. All right, this leg is going to be the same as this leg. Okay, so that's basically a measured move, and that's what we're going to be shooting for. So we're looking for a short off of this Kijinsen level right here. Okay, so let's move to the next one, which is Aussie Yen. Based on the Aussie Yen. Again, this one's pulling up to some structure levels also. We violated Kijinsen. Still have a bearish market because you're below the cloud, basically the first thing, and you got a dark future. Your A and B are pointing to the downside. Pretty much A kind of flattened out a tiny bit. B's pointing down to the downside, but you also have this structure level right here that the market is pulling up to. So with this level, and I like to make these into zones, we're falling into this structure level right here, this zone, and the market is in that zone right now. And we're looking for the market to drop from this point. So if we get that drop, we're pretty much going to be, this is your 50% fib retracement level right here where Kijinsen is. We violated that, so we're about 78.6 area. And then we're going to see if we can get into the trade sometime in here. Watch the price action. definitely get in with a break below Kijinsen, but then we're going to shoot to get through this 2 level, and then we'll shoot for our 1-to-1 ratio or our measured move at the N level. If you can violate the N level, then you're going to go to the V and the E level. Again, very powerful trend intact still, so we don't want to go against that trend. And pretty much we're pulled back to structure, so we're pretty much at resistance, and that's going to give us an opportunity to short this market. All right, so let's move on to the next one, Aussie USD. A lot of these Aussie pairs look pretty much the exact same, and they're all pulling back to a structure level, so we're going to mark that level, mark those levels. You can see right here. So it's kind of getting to that point. We still got a bearish TK crossover. Our future's dark. Okay, and with that said, we're still with the N wave. So our N wave is like this right now. If you don't violate the N wave, then your structure is going to stay the same, and that means you're going to continue. And we're looking to move to this point, that measured move right here, which would take us to the N level. Now we always want to get through the 2 level when we take a trade. So up here we're going to be looking for a price action entry. Again, we'll enter on the CMO or the RCI. If we could get price action, sometime price action gets us in a little bit quicker, so we'll take that setup too. But if you can't even get in on your price action entry, you definitely want to be in when price crosses below Kijinsen. All right, and then you take that trade to the downside and shoot for those levels that I'm talking about. Trying to get through quickly here because I know that YouTubers only have like a 7-minute, only are capable of watching a video for 7 minutes. That's what they say. Okay, they say that we only have the ability to watch a 7-minute video. Our attention span is not that long. So I'm trying to get the video done in 7 minutes, so I know I don't get that much longer. But anyway, guys, let's move on. So CAD yen. Why did I even mark this CAD yen? I definitely know why I marked this CAD yen, because again, the 1-to-1 ratio levels, if you look at this, where we're going to be shooting for is way down here at about 83,707. Now, the thing that I looked at was the market drop gave us this N wave. Well, actually, it's a V wave right now, and you also got a double bottom right here that we failed to get through. So I think we're going to attack it again, and then the market's inside of a box right now. So I like to box this market in when I see that. I'm going to box it in. We're trading inside one candle. I call this inside trading. And you got a box here, the mother candle, and the baby's in here. Whichever way that market breaks out, that's usually the way that we're going. We're bearish right now. We got a TK crossover that's bearish. Your future's dark. Now, your cloud isn't that thick, but it's kind of flattening out, and span A is kind of rolling up. If span A rolls past, if I consider it like this, if we break this box, we're heading up higher to this level. But if we break to the downside, then that's when I would look to getting into the trade to the for a bearish trade to the downside. And again, we'll shoot for this NT level is right here at us. We're right here. So again, we bounced on it once. We need to get through that level, or we're going to held up here and probably range for a while, and then who knows which way we go. But if we can break that level, so if we pretty much can close below that NT level, that's the level I would take my short at, and then use that level once the market drops so far as a stop loss level. Now currently I would put my stop loss above this level, and then break this point, and then put my stop loss down a little lower. All right, but we want to shoot for the N value. Definitely want to shoot through through the 2 level. You always got to get through that 2 level. If you don't get through that 2 level, because this is going to be known as the fluctuation level, and I guess I said that already, but that's the fluctuation level. All right, so that's your CAD yen. What else we got? We got the Euro Aussie here. So Euro Aussie is looking like, let me move this over. This is looking like a long opportunity. Now what we want to look at, we violated this structure level and kind of violated Kijinsen also. So we violated a little bit, but we still got a bullish crossover. I believe we'll see the market break back to the upside. You may end up seeing like a morning star or something here, and then the market move to the upside. If this market starts moving back to the upside, Euro Aussie, if we move back to the upside, then I think the close below Kijinsen will be your entry. All right, that'll be a good entry point. And if the market doesn't go much lower than this, the low that it goes to is where I put my stop loss. I will shoot for that NT value because that's before this 2 level. And then you can see our structure with the cloud is still good. Now we're starting to get a little thick. thick clouds like that. I don't like a thick cloud. A lot of people tell you that a thick cloud is a good trending market. No, to me, the thick cloud you could see is flat, and that's where we don't want to see. As you're trending to the upside or downside, it starts to get a little thinner, if you ask me. But the cloud also helps me to understand if I'm at a high or a low. Okay, and sometime you'll get to a high, you'll get a big flat cloud that rolls over. It'll be very thick, and then you see the market drop. But again, we're dropping into some nice structure points here where you can probably look for the market to retrace itself. Once we retrace, then close above Kijinsen will be a good thing. So the retrace is here. We did get a big outside candle. It's not a good sign for us either. So if we hold and break back above Kijinsen, this is where I look to get into the market. But if not, we could be seeing a little bit more downside on this pair. But I think there's going to be a good opportunity to still trade this week. And again, we got our levels up here. You can see, and you can go back and look at the levels. But the main level that you're going to always shoot for is the 1-to-1. You definitely want to get through the 2 level, but again, shoot for the 1-to-1, which is a measured move at the end value. And that end value is about 166,583 looking at this chart. All right, so let's move on. Again, we're looking at the euro pound. So euro pound actually is, I think euro pound is starting to become a bullish market. We got our TK crossover here. Let me add one thing because I want to see where we are with lagging span. And I never have my lagging span that color. I always have it that color. So Chico span is above these price candles, but it hasn't violated Kijinsen yet. Now, when it violates Kijinsen, that's a big sign. That's going to be a good sign that there's a change in the market. So what I see is, remember how we talk about the 1, 2, 3 structure? So what we see right now in a 1, 2, 3 reversal. So what I see is if this market was going to continue its move, right, this will be the one N wave. And this is part of Ichimoku wave analysis. So when the market drops, you got an N wave here. Well, in order for the next N wave to continue, you start from the high and then go 2 waves, and then you go to the next high. So that would be this level. That market would have to come down and then back up and retrace, but not break this level. All right, but since it broke this level, then now we're looking at a possible reversal, because now you're going 1, 2, and now you're 3, and then shooting for your 4. So that's how we kind of see the reversal looking and taking in place. All right, so that might be, we might be looking at the market starting to move to the upside. We kind of moved up, kind of retraced. Let's see how far that retracement was. See how far this retracement was. Not even much. Actually, it was pretty much close to 38.2 right here, and then we're starting to push out. Now we're kind of boxed in. I would probably say we're boxed in here. Mark this box, and a breakout of that box will really represent the market moving to the upside. You probably get a Kumo breakout at that point also. So I am looking for this to move to the upside. Starting to see some nice strong trending analysis based off of RCI. The RCI is the rank correlation index. I'll probably be putting a video out about that and how to use Ichimoku with the rank correlation index. A lot of Japanese traders use it. Don't hear about a lot of people using it here in the States, but I'm going to put something out about it because I use it. Okay, so I'm looking for the market to move in its N wave structure, which would give us, did I knock those off the chart? I didn't even put them on here. I didn't put our levels on here where our target is. All right. But anyway, we're looking for a long opportunity. We got that TK crossover, and you can see we're flat cloud here. Look for that breakout, and then basically you could look for your 1-to-1, which would be your measured move. I always have that marked. We could shoot for that target, which would be right here at 0.86846. That'll be the one-to-one measured move that we would be looking for once we make this move. Now also, the breakout will probably break us past the 2 level, so we wouldn't really have to worry about that too much, okay? So next one is going to be Euro Yen. Euro Yen is a bearish market. Let me bring that auto. Looks like we're up on a structure level again. Now you can see we got a rejection here. The thing is we're kind of flat with span A. It's flat a little bit, but span B is aiming to the downside. The thick cloud scares me because this sometimes lets me know it's a bottom, but based on the RCI, we still look pretty strong to the downside. So I think even on the RCI, we got a double bottom basically, and our shorter term is up at about 91.6. So therefore, we're going to wait for that breakout of 91.6. We want to see that drop below the 80 level, and then you'll probably see the market drop to the downside. You're going to see also price action here. You got a rejection level here. I think a close below Kijinsen would be definitely the entry for sure. So I would take that. Again, I marked the measured moves right here. So this would be my N wave. Again, my N wave goes 1, 2, 3, shooting for 4. My N value is here, almost lines up with my 2 level. So my N value is at about 127,688. Okay, so we're not getting in on any Ichimoku signals per se. It's not like we're getting in on a TK crossover or a Kumo breakout or anything of that nature, okay, or 3-row reversal. We're getting in based off of direction of the market, the bias of the market, and also the signals that Ichimoku's given us as far as the bias and the direction of the trend. All right, but not as far as any Ichimoku signals that's per se to give us. So we're going to get in on the CMO, or price action, or the RCI. All right, so again, those are going to be your values, your levels that you shoot for. Next one we're looking at is Euro US dollar. Now, I do not trade the Euro US dollar that much. Probably only traded in the last 5 years, maybe 2 trades, okay? But Euro USD kind of looking like a good opportunity right now. Let me see something here. Euro USD still bearish. Now, we got the RCI at about 90. We want to see that drop below 80. And at 90, we're in that overbought area. So looking for that thing for the market to turn around and continue this N wave. So you got one N wave here, and I'm going to draw it out for you. And this is why I'm thinking the market continues to the downside still. Don't see any signs of it not going to the downside still. This is one N wave, right? So that N wave completed. And again, you would find your targets. If you were going to enter up here, you would look for your targets like I have here. You would have put them in for this level. But now the market moves here. Now we're getting close to violating, so we have to be careful here. But now the N wave is this. 1, 2. We didn't close above, so we're still good, and we're going to shoot 1 to 1 will be right there. That's going to be our level where we shoot for profit, okay? Now these levels could change a little if the market moves a little bit higher. It'll push this up a little higher, but you need to get through that 2 level, okay? So we're shooting for, what I want to see is the current candle close below Kijinsen and take that entry at that point, okay? Really don't want to see a close above this wick here. All right, so that's the Euro USD. Pound Aussie. What else do we got? We got Pound Aussie and USD CAD. So let's talk about the Pound Aussie, USD CAD, and then we'll get you guys out of here. Let me see, where are we? So the Pound Aussie, let's see what the Pound Aussie RCI says. So the Pound Aussie RCI, we got the longer term trend basically is like at 89. So that's a strong trend. We're in a good area to realize that this market is still very strong. But your shorter time period has broken down to about negative 83. So that's at the point of the overbought level. All right, I mean the oversold level. So we're at the oversold level. So looking for that market to turn around. Since we're looking for the market to turn around, we broke below Kijinsen and we're finding support at the cloud, okay? Got a TK crossover that's bullish. Your future is bright, and we did violate this structure level, but we didn't violate the lows down here. So that's a very good thing. So I found my levels by looking at this N wave right here, looking at this N wave. And where is this going to take us, okay? So that's what we're looking at here. We're looking for a move here. We're looking for the market to close above Kijinsen. to get into the market again, take a long trade to the upside. Basically looking at this NT value, this N value. The N value is going to come in at 191.040, and that's where we're going to be shooting for when we get into the trade here. If we could violate this upper level, then we start shooting for these higher levels where the V value is and your E value. All right. But that's what we see right now. So let's go to our very last one. Get you guys out of here. We're looking at the US dollar CAD. Basically the US dollar CAD, I'm looking at my N wave like this. This is my N wave here. All right. Well, it's my V wave, and starting my N wave, the completion of the N wave would be at that, like that. So that's why we shoot for the 1-to-1 ratio. We're looking to get into the market here. Close above Kijinsen will take us into the trade. Our NT value is also going to be very important because we could be coming into some fluctuation. Now, crossover is bullish, futures bright, Chiku spans above price. We don't have anything to really hold us except this NT value. And this NT level, we don't want that to hold us, or else we're going to be in a flat market, and then maybe we see the market drop. But at this point, see this USD CAD. Let's see what the very strong market still. So I'm thinking that we're going to still see this market move to the upside. We're above the cloud, haven't broken any lower structure levels, so therefore we continue with our move to the upside. So I'm looking for a trade setup. Now all these that I'm talking about, as we get closer and we get that opportunity to really get into the market, I'll try to give you an update and get you into the market when I get into the market and show you the exact trade setup, okay? But at this point, we're still kind of looking to see what happens here. These are some strong setups, so that's what we're looking for at this point. But guys, I appreciate you. Haven't been doing a lot of videos, been doing a lot of stuff for members, and if you want to become a member at my site, I'm at fx@oneglance.com. But right now, just giving you some things to look at as far as with Ichimoku, an opportunity to get into some trade opportunities. So I appreciate you guys, and until next time, have a great one. God bless. So long.